Hey, welcome back. Thanks for tuning in. As always, it's really great to see you.
This week is all about the spring market. And we're going to tell you what everyone has been talking about, which has been the CPI report, which just got released. We're also going to share with you the latest housing statistics for the month of February. And if you stay tuned to the very end, we're going to tell you what to expect in terms of mortgage interest rates.
Yeah, we did. We had a good report that was released yesterday morning. And while it wasn't as low, and this seems to be now the new norm, right? We say
Mm-hmm.
this over and over again. While it wasn't, the inflation rate wasn't as low as was being projected and perhaps hoped for, it wasn't all that bad. The CPI, of course, the Consumer Price Index, came at, and this is the year over year number,
Mm-hmm.
was 3.2%. A lot of anticipation it was going to be around 3,
Yes.
maybe 3.1. 3.2, though, isn't that bad. What was kind of an interesting, if you kind of dive into these numbers, was the difference between January of 24 and February of 24, which of course would be what's happening month over month,
Mm-hmm.
was just 0.1%, right?
Wow.
So it
Yeah.
starts to lead you to that question is the anticipation or the expectation that the Fed has set to keep inflation down around
Mm-hmm.
2% maybe a little unrealistic? Because,
Yes.
in times past, as we said, I'll give you an example of rents, long-term rents, we normally set about 3% as the acceleration or the increase on an annual basis.
Mm-hmm.
So we kind of have lived with 3% for a long time with a lot of costs, if
That's
you
a
will,
really good
long
point.
term type costs. So is that 2% maybe a little too optimistic? Is 3% going to be, as they say, the new normal? We'll have to wait and
That's
see.
a really good point. And the fact that we only had a 0.1% increase, and we've been watching that for a couple months now, I think it's all really positive. And what's also really positive is the numbers that we've been seeing in the housing market.
Yeah, and we just got those numbers were just
Correct?
released for February just yesterday as well. So let's go ahead and get started and give you an update on what's happening within the market, the local market in Northern Virginia.
Yep.
The median sold price for February was 640,000.
And this is a whopping 4% increase from last month, which we really like to see because in previous months, it was kind of flatlined for a long
Yeah, we were
time.
saying it's holding steady. Now we're
Yes,
actually starting to see an increase,
an
right?
increase of 4%. That's
Yeah.
a really healthy number.
Yeah, it truly is. Well, the number of homes sold in February was 1,721.
And that's another huge number. That's an increase of 27%.
Ow!
That's really positive
Yeah, it
in
is.
terms of the action that we've been seeing in the housing market.
Some would say that's salty. The number of days on the market in February, and of course, this is the time that they went on the market in the MLS as active to the time that they went under contract was 29 days.
And that's the same thing that we saw last month, which is really good.
Yeah, yeah, I think that is a good sign. And then the number of homes for sale at the end of February was 1,748.
And again, increase of 14%. And this is really good news for home buyers. It means you have 14% more homes to look at.
Well, it is a strong number. And as you can see, the correlation, as you look at these statistics, you start to see as you get the increase in of number of homes for sale that are on the market, you start to see the increase for the number of sales that occur in the market.
Mm-hmm.
So direct correlation, if we're starting to see an increase in the number of homes on the market, an increase in inventory in February, we'll start to see the number of homes that actually go to settlement, the homes sold, certainly as we get into April and May, start to increase accordingly,
Yes,
right?
all really positive. And talking about
Yeah,
inventory, we
important.
were a little surprised when we looked back. From the beginning of this year, we have had 5 clients who either signed on to new construction projects or will sign on to new construction projects. And I think it says a lot for what that industry has been doing to help us with the low inventory that we've been feeling for so long.
Yeah, and we've talked about that opportunity in the past, using new construction as the obvious inventory to go to. And in addition to the buyers that we're working with, we also have we have at least 2 listings coming on the market ourselves here during the end of March.
Correct.
So all very, very good.
Yes.
But I guess, the final thoughts really are that, these conversations are still revolving around inventory and interest rates, aren't they?
Correct.
And we have another report, of course, that's due on March the 20th. That's next Wednesday. The Fed announces what they'll be thinking about with regard to the federal funds rate.
Yes.
Everybody anticipates that there's probably not going to be a lowering of that federal funds rate. But then we do have a follow-up, another CPI report that comes in mid-April.
Correct.
And then on May 1st, there is that anticipated federal funds discussion with the Fed, of course, that may start to see interest rates coming down. So we're kind of keeping our fingers crossed for that.
Yes, everybody wants to know about mortgage interest rates. And I think those meetings and those reports are really going to say a lot as to how quickly things improve. Everyone has been saying interest rates will go down in 2024.
They have been.
But you know what? That's a slow movement that is taking place. For the past 2 months, we've been between 6.5 and 7%. That's what most buyers are facing.
Yeah.
And it hasn't seemed to slow them down any. We're still getting good traction. So the anticipation is that at the end of the year, you will see coming down from that.
Yeah. And I think to your point, a lot of the buyers in this marketplace really, certainly we're all monitoring what's happening with interest rates. But as you listen to the various the commentators, and the pundits within the industry, a lot of people are recognizing that buyers are just accepting what's going on, kind of accepting this new normal with interest rates being, that 6.5 to 7%, accepting that, and still very hungry for available inventory. So I think we're all kind of predicting a very, a robust spring market here, right?
Yes, we're very excited.
Well, as always, we really do appreciate you tuning in. We hope the information that we've shared with you today is proven to be beneficial. And as always, please subscribe to our YouTube channel. We are just about a smidge under that 12,000 subscribers now on YouTube.
That's huge for us, okay?
Yeah, it's gigantic. So by all means, please subscribe, and we'll hope to see you soon.
Bye.